last couple of weeks, we've seen signs of excess bubbling all over the stock market in all sorts of places. To the point where I feel like devoting the whole show tonight to laying them all out for you so you're prepared, be ready. All in all, I think it's perfectly reasonable for the S&P 500 to be up 4.9% for the month of November, given that we got a Republican sweep on Election Day with promises of lower taxes and deregulation, something Wall Street always adores. Plus, we got a rate cut from the Fed a few days later. The Magnificent Seven haven't gone crazy either. They've actually been pretty tame this month. So if it's not in the averages or the Mag 7, where's all of the excess that I'm talking about? Frankly, it's everywhere. It's all over the place. We'll have a remarkable rally for one-off stocks one day, then something similar in another stock the next day. You can see it on the crawl at the bottom of the screen every session, particularly after the bell and very early in the morning. Gains in names you never heard of. And that's why this week, during the weekend, what we did was this. We ran a simple screen looking for U.S.-listed stocks that are large enough to talk about on air, with total returns of more than 50%, 50, for the month of November. As of the close last Friday, there were 66 darn stocks that fit that bill, which is an insane number. 66 stocks with takeover-sized gains. Well, but people are really making money, provided they are also taking something off the table. No money made until something off the table. When you dig in this list, what you find are several baskets of stocks that people can't stop buying. They just can't keep their hands off them. And some of these are actually a lot less legitimate than others. So let's start with the unprofitable quantum computing plays, because the best performer of November, at least so far, is a company called Quantum Computing. That's QUBT for all you home givers. It's up an astounding 588%. That's closely followed by two more quantum plays, D-Wave Quantum and IonQ, both of which have more than doubled month to date. That last one sounds like a TV station I'm not working for. Honestly, I have no idea what's behind the sudden interest in these quantum computing stocks. Don't ask me to explain the concept either. You need a physics degree to get your head around it, and trust me when I say that most of the buyers do not have one. While people have been talking about it for years, it's still highly experimental. But I do know stocks, and when you look at the history of QUBT, do you know that this was a beverage company until 2018 when it pivoted to being in software for quantum computing. Now, that failed to inspire much interest, so in 2022, QUBT acquired QPhoton, which is a developer of quantum photonic systems. Right now, they're building a semiconductor plant in Arizona to make specialized materials for quantum computing. And the stock seems to be running on the fact that they're on track to open this facility in the first quarter of next year. And this month, they announced the first few orders for their planned Arizona fab. Again, I have no edge in quantum computing, but I do know that QUBT is losing money and has hardly any revenue. Through the first 9 months of the year, it only racked up $311,000 in sales. This is 6 years into the quantum computing pivot, people. Somehow, QUBT is a $910 million company. Excessive. D-Wave Quantum came public via a SPAC a couple of years ago, always reassuring. And it's also unprofitable. But at least it's on track to make about $9 million in revenue this year. Is that enough to justify a $647 million market cap? The last one, IonQ, is surprisingly an almost $7 billion company after more than doubling this month. They're unprofitable, too, though IonQ is expected to reach $41 million in revenues this year, up about 88% from 2023. I like that. No disrespect to these three companies, but I think people were just reaching for anything with the name quantum in it. Quantum this, quantum that. That seems to be a theme across all the pockets of excess that we're going to discuss. Which brings me to the next group, anything with AI in the name. And that starts with AI Unlimited Group. That's up 349% in the month of November. Then there's SoundHound AI, up 60%. Big Bear AI, up 42%. C3 AI, up 54%. That AI Unlimited Group company was previously known as Lever Global until the name changed in July. It hardly had any trading volume before this month, when the company completed 3 acquisitions in the fintech and travel industries. But for now, just know this. AI Unlimited is one of the hottest stocks in the market, despite having no revenue and no earnings. What can you do? The other stocks with AI in the name are a little bit more legitimate in that they all have revenues, even if they're unprofitable. Take C3 AI. They're on the show a lot, right? We've had them on the show. The analysts are expecting $382 million in revenue for 2024, up 23% year over year, even as the losses have also steadily grown. Now, this thing came public in late 2020, and there's never been much interest in the stocks until a few weeks ago. The only catalyst I can find is that they announced a strategic alliance with Microsoft last week, which sent the stock up more than 24% in a single session. The stock's now trading at nearly 13 times sales, which is absurd for a company with only 23% revenue growth. Again, excessive. The rampant speculation, anything with AI in its name, has also bled into the enterprise software space. So take Innodata, okay, which is actually on our homework list right now. The company describes itself as a, quote, global data engineering company. Yeah, and it has AI all over its website. Innodata is actually profitable, and it touts relationships with victims and 7 customers, but multiple short sellers have targeted the company this year, including one who alleges that Mag 7 relationships are vastly overstated. The stock's up huge after Innodata reported a huge top and bottom line beat earlier this month. The darn thing spiked more than 75% in a single day. Even though the company also disclosed that it's received subpoenas from the SEC and Justice in the third quarter. They say it's related to conduct alleged in a shareholder lawsuit. Personally, I'm not going to pay up for a stock that's being subpoenaed by both the SEC and the Justice Department. To me, I'm calling that fraud. A bunch of other enterprise software plays have shot up more than 50% for November, like Bill Holdings and Palantir Technologies. Those are more justifiable. But both companies are turned to profit. Both reported strong numbers earlier in the month. But Bill Holdings sells for 52 times this year's earnings expectation, while Palantir trades at 170 times earnings. I love Palantir. I'm calling it a tad excessive. I could go on. There's Applied Optoelectronics with a 143% return in November. They make optical equipment for the data center. There's Canaan, up nearly 80%, which is focused on, quote, high-performance computing, chip design, chip research, and development computing equipment, production, and software services, end quote. That's kind of everything, right? Then Geometry, which rallied almost 66%. It calls itself a, quote, leading global AI-powered manufacturing marketplace, end quote. Faro Technologies, up 53%, describes itself as a leader in 3D measurement, imaging, and realization solutions. AvePoint, A-V-E, Point, at a, quote, is a global leader in data security, governance, and resilience, end quote. It's up 50%. And Indie Semiconductor makes semiconductors, photonics, and software platforms, end quote, for autonomous driving. It's up more than 63% in November. 5 of those 6 companies I just mentioned are unprofitable. The lone exception is Faro, F-A-R-O. That's another one that's been around for ages, but investors only started caring about it past month. Bottom line, all right, we're seeing signs of excess all over the place, people, especially in tech. And it's making me a tad nervous, if only because some of these stocks simply have good names and almost nothing else. If it was just tech, well, believe me, I could handle it. But the excess is everywhere. So stick around after the break, and I'll walk you through some more of them. Their money's back after the break.
Coming up, not sure if it's the right time to get into the market? Cramer's taking you on a trip down memory lane and letting history be his guide on when to buy stocks. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.